questions you guys have for me at the moment.
Can you specify which products are only available for retail channel?
Absolutely. Actually, great question. Let me go straight to my daily rate sheet over here. So here's our website. So when you click on the wholesale daily rate sheet and scroll down, and let's go in order here, you're going to see that the first program is the QM community program, and it'll say here retail only, and then it'll list the states. And again, right, so let me talk to you for a moment as if you were a wholesale broker instead. I would say you are in full control of your file, right? We don't go and look for a loan officer within our company that wants to, for lack of better words, participate or loan their license. We always assign the same loan officer on every transaction. That loan officer is not communicating with any of your clients. You're in full control of the deal. This program here, even though it's available via retail, but because it is on our rate sheet and matrices, it is available through the portal as well. So you can submit this file directly through the portal. Again, just a quick reminder, right? Always check your states on a per program basis and the applicable turn time. And here's the link that takes you to that search map that I mentioned a moment ago. Link is working right now, but we'll check here. So, and again, let me keep scrolling down here. So that's one of the programs. And if you look here, there's 0 LLPAs, as you can see here. Okay. Second, so now we have the agency. That's pretty self-explanatory. Prime Full Dog, these are all self-explanatory. DSER Prime, this is only available via wholesale, but it is one that we just rolled out, which goes as low as 5.75 best case scenario when you have under 60% LTV, 1.25 DSER, 5-year prepay. If everything fits and checks off, you know, we go as low as 5.75 on this one. Not very many exceptions are going to be made on this file, as you can understand, but it's a pretty cool program for the elite pricing, if you will. And then this is our default DSER non-QM program. I'm just going to scroll through here to answer your question. Here's the self-prepared P&L portfolio. So the QM community, I refer to it as niche retail. Self-prepared P&L, I refer to it as portfolio retail only, because these are specific through FDIC depository bank relationships that we have. And then the other one is the no job, no income retail only program here, right? And of course, all occupancies are available. There's a no FICO, no credit score option available with this program. It takes you to 65% max LTV with a 680 FICO score with this one here. And this one goes to 70% on a primary home. And again, you know, all occupancies are available for a national as well. And if we keep scrolling down, I think that's it, because the prime closed in second is available. Wholesale, this is wholesale DSER second. Yeah, those are going to be what you're going to see to be retail, but also available through the portal, the pricing engine, and the matrices, because these are programs that we are closing all the time. Now, let's say, for example, you have, let me give you this example. Let's say we're talking about the commercial multifamily, or let's say we're talking about the bridge. We just rolled out a fixed flip flyer. Let's say we're talking about a some other product that just has to go retail just because it's not available via wholesale through our partners. In a situation like that, where you're not going to find that program on our rate sheet, therefore you're not going to find it on the matrices, therefore you're not going to find it on our pricing engine, then in a scenario like that, then that's going to be manually submitted, and we proceed just like any other transaction. The only time, and again, if I'm talking to you as if you're a wholesale broker, if you are going to leverage our license due to licensing limitations on your end on any product that you would not have access to normally due to licensing, then in a scenario like that, then we do have, of course, a 10% haircut or a $500 fee, whichever is lower, when you're leveraging our license and having access to the program. But if the program is only available via retail, no fault to you, then obviously the 10% doesn't apply, right? It's only when you're leveraging our license because you don't have that licensing available to you.
What do you mean by the 10% haircut? Are you talking about the 10% commission cut or
Yeah. So exactly. So let me give you an example
yes.
when that may apply, right? Because for example, the QM community program is only available retail. That's of no fault to you, right? That's just the way our program is set up. That's of no fault to you, right? So we're going to assume that you're licensed in one of these states. That's fine. You're going to get your full commission. Everything is perfectly normal, right? Let's say you are not licensed in any of the states and you're going to use our license, even though it's only available via retail, then a 10% haircut will apply to the gross commission. Let's say it's a regular program. Let's say it's a regular DSCR program, like this one here, okay? And let's say that, let's use California, where a real estate broker's license is required, right? Even on a DSCR. And let's say the broker is licensed in Texas, but not in California. Then in that situation, a 10% or $500 fee, whichever is lower, would apply, right? Because now they're leveraging our license. I'll give you one strange scenario. I actually have a few brokers that, I'll use the same scenario as in California, where they are licensed in California, everything's okay, but one particular broker comes to mind. He's very heavy in the Jewish community, and he knows how to sell rate very, very, very well. I think every file is over a mil with like, he prices it out with like 2 points rebate, and he's always reaching out to use our retail channel, even though he's licensed via, in California. Now, you and I know why he does that, right? He's doing that so that the CD does not reflect the rebate. So in a situation like that, he's definitely leveraging our license, knowing full well that he can wholesale the deal. Then we are going to apply the 10% or the $500 fee. Hopefully that answers your question. But if in doubt, just let me know. As long as you're licensed in the state of the retail only product, there is no haircut. So same thing for this one here, our self-prepared P&L. This one is available in California, Texas, Nevada. You have a California deal right now, you're not going to get penalized with 10% because that's of no fault to your own that the program is available only via retail, but you are licensed in California. So it wouldn't apply there. And it also wouldn't apply here because this was available in California and Hawaii.
Okay, thank you for the clarification.
Yeah, no worries. And of course, let me, I don't usually do this, but let me jump in here really quick. Let me show you our pricing engine. You guys probably already have access to it, correct me if I'm wrong.
Yeah.
Or you do? Okay, great. So what I was going to highlight was that sometimes a broker might get confused with these programs, right? Because I'll say that off rate sheet retail. And what I mean is like these, if it's a retail product, but it is on our rate sheet, it's going to be available on our portal. That's no problem. You can submit all day long. It is only when they're not available via the portal, the rate sheet, the matrices, that we have to do manual submissions, manual registrations, and so forth. But yeah, that answers that question. And then all our hyperlinks, of course, will take you to the matrices. Right over here, you're going to see all our programs here and all our resources here as well. Actually, by the way, guys, once you are fully set up with our non-QM, these guidelines here are the guidelines for our own AAA products. So if you guys are going to get fully set up via core, this is what you're going to go to right here. This is what you're going to go to. This is where I go to for any of the questions that our team has. Of course, if you are going to explore exceptions beyond what's shown here, then of course you will reach out to our correspondent liaison department to explore further any exceptions for purchasing.
Okay, very good.
Yeah. Yeah. I mean, and so that pretty much kind of wraps up, I guess, our default presentation to our overall products. I didn't want to go too much in depth, which we can, by the way, right? But it can definitely go very long if I go into specifics as to how the portfolio banking relationship works, the way we look at reserves, when you are going to go with the option of reducing the term of the CD and all that. I mean, if you guys have time, I can go a little bit deeper into that, or we can leave it for a different presentation. But I just kind of wanted to gloss over as a whole to give you an overview of what we have to offer. Do you want me to go a little bit in depth into those two programs, those two portfolio programs, or are you guys okay?
For to specify, the main difference with CDFI and the FDIC would be, can we use the cash out proceeds towards a reserve or not? Would be the first.
No. So you're correct. So you're correct that the competitors that do the CDFI, they do allow you to use cash out proceeds. Ours, which are FDIC products, those do not. Now, I know I said earlier that there's a gray area to the self-prepared P&L. Keep in mind there's two of them, right? There's the owner-occ no job, no income. That one does not allow cash out proceeds to satisfy reserve requirements whatsoever. The self-prepared P&L one does allow an option if you take the cash out proceeds, but then you route them directly to a CD account, which most borrowers are going to not want, right? Yeah. So it's a gray area. So let me give you an example. Let's say that the self-prepared P&L requires, I'm just going to make up this number, 12 months reserves. And by the way, I did not mention this again. This is more in-depth training. The portfolio programs calculate reserves based on PNI, not PITI. Okay, so that's also important. So let's say the program calls for 12 months reserves, and it does not allow cash out proceeds to satisfy reserve requirements, but the borrower was going to was going to cash out an amount equal, it just happens to be that it was equal to 18 months reserves. So if he wants to apply, if he wants to use a cash out proceeds, he would have to take 12 of those 18 months, deposit them, and in a situation like that, then it would be okay on a self-prepared P&L program. But again, right, most borrowers are going to probably say no, they're not interested in something like that. And by the way, the self-prepared P&L program sounds pretty cool. It makes for great marketing. It is a great program, but it's also market driven, right? Because not too long ago, the self-prepared P&L program was probably 7/8 better in pricing and rate, versus the third-party non-QM program. Right now, it's not the case. Right now, it almost makes no sense. Many times I find, telling brokers, hey, just go with the non-QM, third-party prepared P&L. I mean, the pricing is a lot better. You're going to close it a lot faster. Less I's to dot, less T's to cross, right? There is really no reason to be exploring self-prepared P&L. And now a broker might say, but you got to understand that that's my challenge, that we are having problems right now getting their tax professional to help them out. They're not available, they're sick, whatever the reason may be. And we like the self-prepared P&L. Okay, I get it. I understand you completely. But also remember, Mr. Broker, that you need to be involved with this P&L because the brokers are not going to put it together correctly. And with the portfolio programs, I don't have second go-arounds. I can't go back to the underwriter and say, hey, please unsee that, right? That's not going to work. Not with those programs. Where with the non-QM, which are our own programs, we can work with you depending on where the file is at, where in the stage. So there's a lot more wiggle room there. Also, another thing with let me show you our guidelines really quick here. Something important to highlight with our third-party non-QM. Here is a sample CPA letter. And what I wanted to highlight here is the verbiage, because ours allow for I have either completed or reviewed. Yeah, it really goes a long way, because you guys know that many of our competitors will require filed, right?
Yes.
Yeah, so this falls within our own AAA guidelines. And so the reason why I mentioned in that slide earlier that why would I refer to 85% P&L as off rate sheet is because it makes a difference, right? If I have to go to a third-party correspondent investor, then their verbiage may require for it to say filed, right? But if it's going to fall within our own AAA guidelines, then you have that advantage. And I think that's definitely huge to highlight there. You know what? Let's take a quick moment, and maybe I'll highlight a little bit further the here. Let me do this here. I won't take too much of your time, but I'll show you something very quickly so that you can here go to the matrices on the no job, the owner no job. I think it's worth the extra 10 minutes if you guys don't mind, but I definitely get a lot of questions on this, and I think in my trainings internally, we go through these at least a few times during the month. So here we go. So this is where I think most get confused. So if you have a cash out transaction, it calls for 24 months P&I. This is where CDFI is going to be a little better, right? Okay, so it calls for 24 months. The CD term is going to be for 25 months, 1 extra month. All other transactions, meaning a purchase or a rate and term, are going to require 12 months P&I with a total of 13 months CD term. If you have a foreign national, or if you have a no FICO borrower, then that would be 24 months, also with 25 months CD term. Now, this CD is not a money maker, okay? Because I do get asked, hey, what is the CD term on that? It's like in the twos, okay? So it's not a money maker, and no, the borrower cannot go choose their own account anywhere else. That's not the way that works. And but this program also allows for a 1 times 30 on the mortgage. So it's weird, because this program is a lot stricter than non-QM, but yet defaults to allowing a 1 times 30. It's pretty cool, if you ask me. Now, let me jump over to the rate sheet, and let me walk you through the options that it has regarding the CD account. Here we go. Okay, so hopefully I won't confuse you, but here it goes. The minimum reserves is 6 months, and the maximum is 36. And this is as it relates to the CD, right? If the program only requires 12, but you happen to have a wealthy borrower that doesn't mind depositing over and above 12, but no more than 36 months, then he actually gets a rate improvement for every 6 months up or down, right? So on your cash out scenario that you were asking me about, we start at 24, okay? Let's say the borrower wants to only deposit 18, then we drop that on 6-month increments, and that is going to bump up the rate by 1/8. So let's say you wanted to take it all the way down to 6 months, that's 3 jumps, right? 24 to 18, 18 to 12, 12 to 6. And for each of those jumps, it's going to be 1/8 on the rate, so that's a 3/8 hit. So now you're at 7 1/8 with the 3/4 cost. And now you only have to deposit 6 months versus 24. But this is where everybody gets it wrong. What the broker might have heard is that I only have to show 6, and that's what's missed. And it's no, you still have to show upfront that the borrower currently has 24, but you're only depositing 6 based on these adjustments, and the term of the CD is still 25. So you're showing 24, the term is still 25, but you're only depositing 6. That's where everybody gets it wrong or gets a little bit confused. Now here is the one option that was recently added. What if the borrower does not want to have a CD term whatsoever? Then in that particular case, you are adding 1% to the rate, but then you're also subject to lowering the the LTV by 10%. So that might really hurt you, right? Now, I'm going to say this, and I'm not being recorded, am I? Or am I being recorded?
You are being recorded.
Okay, so we can talk about this offline. Okay, so so there is a solution that might work, for working around this to a certain extent. Okay, so but we can discuss this further. But at the moment, you have a way to buy down or buy up the reserves, the amount that is deposited, no less than 6, no higher than 36. And then there is this option to avoid the CD term altogether by raising the rate, but then it also lowers the LTV. So you do have those options available to you now. Just don't forget that even if you negotiate it down to 6 months, right, you still have to show up front that you have the 24 months reserves up front, P&I, not PITI, and the CD term also still applies for 25 months. Okay. And that's really kind of the trick to this program. Now, here's the other thing that really messes people up with this program, believe it or not. You have a borrower the broker that says, I want to close this loan, but the borrower just deposited a bunch of money into their account. It's not going to work. Right? This is the kind of program where you want to do all your transfers, right? Any deposits last month, so that this month, because we only ask for one VOD, right? Or a 1 month bank statement, the bank statement that you're going to close with, or the VOD, needs to be clean, right? You can open, you can submit, you can work on your file, but expect to not close it this month, close it next month. This is definitely not the program where you want to have to try to explain large deposits and all that stuff. You want to do all your homework the previous month.
Okay. Can we do this with a foreign national who doesn't have any credit scores?
Absolutely.
So it says pricing was 680, but also shows a no FICO.
Yes.
That's a conflict of understanding I had when I saw the rate.
Yeah. So on this one, you do have a foreign national option, as it states right here.
Mm-hmm.
And so this is a no FICO, no credit history. So this is where that borrower will fall.
Mm-hmm.
And the reason why it's a little bit confusing, it's because there is an option for borrowers that have limited trade lines or limited bureaus. They don't have at least 2, or they don't meet the trade line requirement. They are, let's say, a U.S. citizen or a permanent resident alien, and so they would fall under this box here as well. But if you have a foreign national which clearly has no credit history or no FICO in the U.S., right, in the U.S., then you're going to default to 60% as well, up to 1.5 mil.
We don't have credit.
Yes,
we don't have to initiate to pull the credit because there is no social security number.
For a true foreign national, you're not going to provide any social, correct?
Do we need international credit report?
Yes, well, you are going to need some trade lines. Yes,
Trade lines from which
foreign country.
foreign country?
Yeah, and those
Uh,
should be pretty easy. Those should be pretty easy. Whether you don't necessarily need a housing. As long as a lot of the times what you can use are financial institutions, right? I think I see most borrowers use financial institutions as trade lines. Just get a couple of them to meet the two trade line requirement for 12 months. That should suffice.
I
Again,
see.
yeah, yeah.
Team, um, I'll I'll summarize what these mean later this meeting.
Okay.
This is a combination of Open Bank, Hanmi Bank's product, and Royal
Mhm.
Business Bank's product.
Mhm.
And it looks beautiful if you understand it correctly.
Correct.
WMB product too, SoFi Banks. This
Yeah.
deposit TCD term directly is the same as the WMB product.
Mhm.
Rates are better with this one.
Mhm.
No income, no job is somewhat easier than open bank because of reserve requirement by raising the rate.
Mhm.
Foreign traditional credit line reserve requirement of 24 months, and for foreign national and Hanmi Bank's foreign national are identical. So your operations manager did a fabulous job making this underwriting guideline. I wanted to apply.
Yeah. No. 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 You know what? I actually.
But it's really difficult to qualify. That's the problem. But I will explain furthermore after this meeting separately. So that we have a specific niche who we need to sell this to.
Yeah.
It works, and I want to share why it how it works.
I really appreciate that feedback, and I'll tell you why. Earlier I mentioned that I did work at the CDFI. I used to work at Change before, and one of my very, very first jobs, I'm 50 years old now, was at East West Bank at the corporate office. And that was my very, very first time that I got wind of these very unique products, right? And so you're right. When you talk about the Cathays, the preferred banks, the East West banks, and all RBB and Homni and all these banks, very, very unique products, but they're very difficult to understand broadly, right? And so when you offer them to the marketplace via wholesale, it can turn into a nightmare. It really can, if you don't understand them well. And I've worked at, as you already alluded to a couple of them, there's only a handful of companies out there offering these programs. So even when I made my move, I was very I did my homework, right? Who am I going to work with that actually knows how to underwrite these products and really truly does have a good relationship with these products, even though they all have a relationship with the products, but who really, really has a good relationship and a good underwriting grasp to these programs. And that was difficult. That was difficult. And personally, yes, I mean, I feel like I can brag a little bit that I feel that we probably have the better relationship, the better understanding of the underwriting that takes place. Now, right now that you mentioned some of these, what you might not be seeing in our rate sheet is that there are some wiggle rooms. For example, I'm sure you might know that there is a CRA program via the portfolio programs, right? You didn't see it listed. I do have that. I definitely do have that, right? And so there's a couple of nuances in there that are not in there intentionally, but only to not further confuse the marketplace. So, but since I know that you know that, definitely send out those scenarios to us. And if it's something that we can get done, we'll definitely get it done. But yes, putting those guidelines together in a somewhat digestible way was a little bit difficult, but nonetheless, I think we're pretty happy with that. And as long as the scenarios come in, then of course we can, then we can expand further and look at what we can do. But you're right. I mean, the lenders that you mentioned right before I got on this call, we were on an AE training, and one of our AEs was asking about what she sees Cathay doing out there, right? And East West Bank, and I said, look, here's the thing, and you guys might feel the same way too. The the issue with some of them is that they really, really do not like to work at all with any wholesale channel or arm at all, like at all, right? And I used to work, by the way, I won't say names here, but I used to work at a company that had a relationship, so-called relationship with some of these banks. And once I found out how they were structured, it really wasn't a healthy, sustainable relationship to be able to do it via a wholesale platform, right? It was just going to create a lot of problems and issues. So I think we're at a place here where I think it's definitely well ran for what we are marketing. And if we are working with a partner like yourself that understands this a little bit further than the other brokers out there, then it makes it even it makes it a lot better, right? Because sometimes I do handpick our brokers. I will be transparent with you. There are some brokers sometimes that, I'll discuss these programs and they completely don't understand. They want to see these programs through a non-QM lens. And there has been times where I will tell the AE, hey, you know what, if I were you, please don't talk to them too much about those programs. I don't really think they are going to grasp or make the best use of it. It's just going to go wrong, in my opinion. And so I appreciate your feedback. I think this is great. If you guys can leverage these programs, I think that'll be fantastic.
Thank you so much for the explanation. We have a hard stop coming in 5 minutes. Do you guys have any questions? Yes, Frank. Yes, Freddie, go ahead.
No, I said no questions. I think everything was pretty thorough.
Okay. Okay. It was very thorough, very detailed orientation and presentation today. Thank you so much for your time. And Ozzy, please send me an email with approved warehouse list. If Florida Capital is approved already, then we may be able to submit right away. I think, we do LIPA, HOP, those kind of direct lending as well. We are registered lenders to those nonprofit organizations. So truthfully, the main thing that we should look into is the DSCR. Second is look into the second DSCR, compare it with the AM West. Third, the no job, no income, and self-employed. Self-employment is from Open Bank. We have a couple other channels that uses Open Banks and SoFis. However, their reserve requirements is significantly reduced than others. So I'll present a summary of today's meeting after this evening's meeting. But anyhow, thank you so much for your time. Thank you, Ozzy. Thank you, Oscar.
Thank you all. Thank you, Oscar, for putting this together.
All right. Thank you, Ozzy, for this presentation. Thank you. Thank you, everyone.
Have a good one. Thank you.
All right. Bye-bye.
Bye-bye, guys.